All right, YouTube video time. Have not made one of these in a little bit, but we got the new setup, got the camera working. It was kind of being glitchy before, but anyways, in this video, basically what I'm going to do is I'm going to give you guys a full rundown of my strategy. I am 22 years old. I make around $100,000 per month doing this, give or take. Of course, not every single month is $100,000. Some months I'm actually losing, but I'm going to break down everything that you need to know in this video. I'm going to try not to have any edits or anything because I don't know. I just don't really like that, but first things first, let's get like a little bit of an introduction because most people, when they first think about trading, they think that I am a day trader. I am not a day trader. I'm a swing trader. So let's say like a day trade, right? Like if this is a chart this whole day, right? Like you're seeing all the candles in there versus a swing trade, this would be like a whole month. Like you're seeing all the candles in there. So bigger moves take time to develop. If you want to catch the big moves, it really has to be done by swing trading. I know so many day traders who have switched from day trading to swing trading, me being one of them. Initially, when I first started trading, I was day trading, and I'm not going to say it didn't work because I didn't really know what I was doing, but it didn't make as much sense to me as this does. And I'm going to show you guys exactly what I mean. So first of all, let's go over to my screen. Look at that. I feel like an old person. I don't know how to use this type of stuff anymore. But okay, so this right here is my charting platform. Now, essentially what I'm doing on this program is I'm using the 1-day chart to find setups. So on the left here, this is my 1-day chart. Let me move this over so I can actually see. So this right here is my 1-day chart. On the right, I have the 1 hour, the 5 minute, the 1 minute, and then my price alerts and stuff. But basically all you need to know is the daily chart, and then entries are going to be done on the 5 minute or the 1 minute. Now, when it comes to looking for a stock or looking for a setup, like trying to find what I should want to trade, I'm looking at the 1-day chart, and on the right I have the 1 hour chart. So this is basically just giving me like a zoomed in version of what's going on here, kind of like a magnifying glass so I can see kind of everything. Now, amazing fucking example happened today where I'm actually up pretty decent today, but I'm going to show you this example because there's 2 examples here. Now, what I'm looking for is the strongest stocks in the market. Now, I want to see on the daily chart again. The only indicators, by the way, that I have are the 10, 20, 50, and 200 simple moving average. On the bottom here, I have volume. Let me move this. On the bottom here, I have volume. I have the 22 EMA on volume because this gives me the average over about a month. 22 bars is around 30 days. Obviously, the market's not open every single day. Weekends are closed. Anyways, so what I'm looking for, this is a picture fucking perfect example. And I'll show you a couple more picture perfect examples. But basically, the stock makes a very big move. It makes around a 236% move, right? Off the actual lows to the peak of this was 274%, 273.99, whatever. But basically what's happening here is the stock is gaining momentum and it starts going up. So this is days, right? Like I'm not sitting here trying to time the bottom or time the top or anything. I'm watching this thing and I want to see that it starts gaining momentum. I want to see a very, very, very strong stock. What this means to me is a lot of investor activity. Sometimes I'll refer to this as like the investor footprint because this is where like funds, institutions, people with lots of money are flowing money into this. The thing doubled in 22 days. You can't really deny that, right? It's not some kid on Robinhood just buying this thing up over and over and over. What's happening is, large investors are going into this and they keep going in. So there's a lot more buying pressure than selling pressure. Very, very good thing here that this stock is one of the top performers in the market. So a very strong stock, right? Get that out of the way. It makes a big move up and it starts to pull back here. I want to see an orderly pullback where the stock holds up. I want to see higher lows and lower highs. In this example specifically, it's a little bit harder to spot those lower highs, but we can see over here on the hourly kind of what's going on, and we can see the structure of this. So you might notice that a lot of my trend lines are just going straight through some of these candles. I'm looking for where price touches majority of the spots, right? So majority of the times price is bouncing along this area, and I can see that very clear here. We can see kind of like an attempted breakout here, which I actually did buy it this day, and I ended up losing the next day. But it did attempt to break through here, and we can see it held above that area quite a bit, came right back down, and tried to come back up, tried to come back up, tried to come back up, and just tightened up here. One thing that's extremely important that we didn't really get, or this one's kind of a little bit wonky because of that, you want to see first the big move up. You want to see the moving averages in order. This is where the best trades happen. Can it happen when the moving averages are out of order? Let's say like the stock is building a range below the 200, like giving you this type of setup below the 200 or maybe below some of these moving averages. It's not the end of the world, but you have to be a lot better at this. So to keep it very simple, let's just go over this checklist. You need a big move up of 30% plus or more. you want to see that the moving averages are in order, 10, 20, 50, and 200. They should be inclining at around a 45 degree, 30, 45 degree angle, something like that. And then you want to see a pullback in orderly range being an orderly range forming here, so we have higher lows and lower highs. And as this range is being built, you want to see that the volume is dying out slowly but surely. So we can see that this volume here was dying out. Next day, I think this had some sort of news or attempted to break out. I ended up buying it this day as well, and it just didn't work. So I lost on it here, and I lost on it here. But I've already made back all my losses because I bought it this day. Now, the day that it's breaking out, so as soon as it's breaking out of this range, we can see I was definitely early here. It didn't consolidate very much. It didn't pull back to the moving averages. But here, it pulled back to the moving averages. It undercut the 10 right here. And it started to break out here on pretty good volume. I thought this looked good. It was totally going higher, but it definitely stayed within its range. The next day, we can see that this thing is totally breaking out. Well, not the next day because this was Friday and now this is Monday. But we can see this is totally breaking out. This is the day that I was like, I have to fucking buy this. I don't really want to buy it because earnings is coming up. We can see here on my toolbar, which I'll have in the document where you guys get my layout. I'll have how to add all of this. It'll literally, when you open my layout, it's going to look exactly like this. It's going to have all these things. I'm going to update it right now so it has all these lists, like literally fucking everything, all these tools up here. And I'm going to show you in this video how to actually use that. But yeah, this is the day right here that I bought it. Very, very strong. So as soon as it's breaking out of that range, that's when I want to buy it. Now, in this case, it was breaking out of the range, but it just didn't end up, continuing. Today, it has continued, and it's actually doing really good. So when I spot a breakout candidate, essentially what I'm doing is I'm waiting for this range, to be formed. And then here we can see that the stock price is gapping up out of this range. It is very clear that this stock is breaking out. If we look at this on the hourly and we look at where this is here, this thing is totally ready to go higher. So when we have a stock like this that's very, very strong, making a big move up, pulls back, builds a range, and starts putting in higher lows, this is a great indication that the stock does not want to go lower. That's why I always say I want to see higher lows. I don't want to see that the stock is channeling down or something. If I look at RKLB, this is a stock that's channeling down. Is it building a very nice trend line? Sorry, I put a square. Is it building a very nice trend line? Absolutely, it's building a very, very nice trend line. Not to say that you cannot trade this because this is an extremely strong stock, but it is not preferred. Now, the last 2 days, it's put in higher lows, and it's kind of put in higher lows from here, but again, it's not preferred. This is something that I would put less money into, have less risk on. It's not the most orderly pullback. It's kind of just channeling down, whereas Jobby, we can see that this thing is holding up so much better. Now, if we look at what's going on with the market, we can see that the market the last couple of days has been really choppy, very, very weak, lots of stocks selling off very heavily, whereas stocks like RKLB, this is holding up, yes, but it's making lower lows. Jobby, this is holding up, but it's making higher lows. This is a much stronger stock that has more signs of investor activity. This is more likely going to be a winning trade, whereas something like RKLB is not as likely. It's not to say that it's bad, but it is not as likely. So I would be much more focused on a stock like Jobby rather than a stock like RKLB. Now, one thing I don't like is this has earnings coming up in 2 days. I don't like buying stocks before earnings because maybe this doesn't go too high, and then it's like, fuck, what do I do? Do I hold this through earnings? Like, you don't know where earnings is going to go. I mean, these things can kind of go anywhere. This is one I was looking at. I wanted to buy this, but, I couldn't. Today it broke out, and it was definitely going, and after hours, now it's down 20%. So it's like, it gets really tricky. I'm going to try not to overwhelm you guys with too much of that stuff, but let's run this back really quick because I want you to understand this. So you want a very strong stock, making a good move of 30% or more, going straight up, right? Moving averages in order, 10, 20, 50, 200. The moving averages should be inclining at a 30 to 45 degree angle. If they're straight up like this thing back here, it's probably, I fucking hate TC sometimes. It's probably not the best. Like when it's very extended, right, from these moving averages, it's going straight up. Like you're not going to want to buy it when it's up here. You want to buy it when it pulls back to these moving averages and starts to set up and build a range. We can see in this case, it did kind of do that. Not the best example. Jobby is a very good example where it holds moving averages very well, puts in higher lows, lower highs, breaks out. So on the day that it breaks out, this is where we want to buy it. It should have significantly higher volume than any of the previous days. And as it's building the range, the volume should be dying out as well. So let me show you really quick the opening range buy. So when I spot a candidate, right, and I want to buy it, I'm waiting for that first 1 minute opening range candle. So if this stock is already breaking out, right, I'm not just going to buy it the second the market opens because I have no idea what the fuck's going on. I'm going to go over to the 1 minute chart and I'm going to wait for this first 1 minute opening range candle. A lot of you guys ask me, how do I know that it's going to be a high volume day? Well, I zoom out a little bit. It's really not that difficult. So on the 1 minute chart, I zoom out. Look at this 1 minute candle volume. We can see that is significantly higher than this day. This is already high volume and it's been 1 minute. I already know that the volume is higher than average. This was an attempted breakout day yesterday, and that was a very high volume day compared to these previous days. And this thing's even fucking bigger, and we haven't even gotten started. So then I'm waiting for this first candle, right? To check the boxes, you want to make sure that this thing not only is breaking out of this range, but it should be above the previous day high. If it is not above the previous day high, it is probably not breaking out. Now, in this case, it was breaking out. Very obviously, it was opening up above previous day high. It was totally coming out of that range. We had that first 1 minute candle have very high volume. We wait for that first 1 minute candle to form, and as soon as the high is taken out, that is when we buy it. So in the good cases, these things take out the highs very quick, right? It's usually in the second candle. It's not always the case, though. Sometimes this thing can have a red first 1 minute, and then for the next 10 minutes, it's just kind of going lower, messing around. It doesn't break the high. So what I would do is I would, choose that high right there, right-click, create price alert. It would pop up in my alert console, so I'll just show you right now. Right-click, create price alert, and I would see right here, Jobby, price alert, and it would notify me. So it would just go off. It'd be like beep, like super fucking loud. And I'm like, shit, go to Jobby, buy this thing really quick. And I go over to my broker, type it in, and that's how I do it. So I buy it as soon as it breaks that first 1 minute opening range high. Stop loss goes at the low of the day. Now, how do I know how much to buy? Show you a magic trick right here. This tells me exactly how many shares to buy, where to put my stop loss, which it's not updating right now because I've had TC open for the last fucking 13 hours. But if I were to restart this program, it would show you. So yeah, this is just calculated like low. So it's the low of the day. And this will tell you exactly how many shares to buy, where to put your stop loss. And if the ATR check is red, that means the stock is probably up too much on the day. But you can always check by verifying, is your stop loss wider than the average daily range of the stock? So ADR right here is 8.25%, sorry. Average daily range, which means on average this thing moves about 8.25% per day. So as long as my stop is tighter than that, perfectly fine. Now in Jobby, in this case, the second it broke the 1 minute highs, you're not going to be able to buy it right on that penny. You would have been able to buy it somewhere up here, which is like what we did. And stop loss is at the low of the day, creates about a 3% stop. So you want to risk no more than 1% on these positions. In a stock, for a stock like this, that's just totally a 1% risk because it's one of the strongest stocks in the market. The market's doing really good. It's held up the best. It's putting in higher lows, lower highs, very great setup. I don't really like that yesterday was a high volume day, but it was an attempted breakout. It's showing me tons of buying pressure. And today they acquired another company, it just opened up higher. I don't know how significant that news was. A lot of the times I don't really give a fuck about the news because it's all just noise. Unless price is reflecting it, I don't care what the news says. So I could see that it was gapping up today, and I went and I checked the news because I did see, a pretty big gap up, some volume being traded pre-market, and I was like, I'll look at it. And it said some sort of acquisition of some company. Don't really give a fuck. Does that really matter? Who knows? And the only thing that matters is that this thing is opening above this range and it looks buyable. That's about it. But yeah, so I just buy it on that I just buy it on that 1 minute opening range high. I look at my risk calculator down here. It'll tell me where to put my stop loss, like quickly where the low of the day is, how many shares to buy, and how much that will cost me. Now, in this case, obviously the stop is super wide. It's about 11%, so it's telling me I can't really buy that much at all. To edit this risk calculator, a lot of you guys ask me that, and you want to know, let's say you come in here, you put 1% of your account value. So right-click, edit, and this first value, you put it at 1% of your account value. So I'm going to have this set to 1,000 for you guys. That's for a $100,000 account. That's what it's going to default to when you open this. So you right-click shares to buy 1% risk, edit, change this. You right-click shares or dollar amount of position, and you change the exact same thing. The first value, the 1,000, that's what you're going to change. This will tell you, but go verify it on your broker. So when I actually open up my broker, let me see if I can show you guys this. When I open up my broker, what did I just open? I accidentally almost opened OBS twice. I'll just go on my cash account so I can show you guys. Okay, so let's switch over to the broker really quick. Switching over to the broker really quick. Boom. All right. So basically how this works is I have this customized layout right here. So you're going to go to custom, and you're going to put these things on the screen. So what I have here is I have the chart, I have news. So I went in here and I saw Joby to buy Blades passenger unit for up to $125 million. They acquired something for $125 million. Do I really care? I mean, the market cap of this stock is $13.5 billion. 125 is like 1% of, or 10%. I actually don't know. I can't even do the math right now. It's 1 or 2, I think it's 10%. Or is that fucking, whatever. It really doesn't matter. But it's not that significant relative to the market cap. And it just really isn't that significant at all. I just like that the stock is very, very strong. So when it comes to this, how I actually do this, and by the way, you guys can see you don't even have to do basic math to be able to do this. I'm not a fucking mathematician. I'm not a genius by any means. But yeah, so you come to Weeble. Sorry. You add the chart. You add news. You add positions. You add trade, which is classic trade. You add options. If you want to trade options, this isn't necessary. And then you add order entry. You add orders. Now you group all of these together. So I have them set as 2. You can set them as any number you want as long as they're the same. And then you come here and you click Save as Customized Layout. So to add a widget, you click on this right here, which adds it. Basically, it'll do a blank layout. So you do new layout, it'll be a blank layout. And then you add the widgets. You add all of these widgets. You set it up just like this. It's so easy. Now, if I'm looking at this on the 1 minute chart, so again, I'm going to buy this thing right here. So we can see, the 1 minute high. Sorry, camera's a little bit in the way. But we can see the 1 minute high right here is already taken out. So I can watch it on my broker. I can watch it on TC2000, my charting platform. But this is where I actually place the trade. And basically what I would do here is I would click the stop loss box. Well, I don't even need to. First things first, I'd type in, all right, it's telling me 454 shares, which would be an estimated loss of $1,000. My stop loss is going to be at the low of the day. I can see that's 18.27. And as soon as I type in this box, it'll automatically check this. We do not check the take profit, and we switch this to good till canceled. So we can see $962 is the estimated P&L if this trade were to stop you out. Now, of course, you're not getting much into this position. You're only getting, what is this? $9,257 into this position, but you're only risking $960. So although you're putting in $9,257, you're only risking $962 because our stop loss is at the low of the day and we're getting a very tight stop loss. Well, in this case, we're not getting a tight fucking stop loss at all because the trade's already, played out. It's already day one. It's not that it's played out, but you know what I'm saying. Like this isn't, you're not going to buy the thing at the end of the day. You want to buy it, way down there so you have a really tight stop loss. That way you can put like 40, 50 grand into the thing, only risking $1,000, for example. So the more money you have, the more money you're able to risk and the more money you're able to make. This is a game of scaling your account. This is not an overnight game. If you try to get rich quick, you're only going to expedite the process of losing more. That's just how it works. There's no getting rich quick. There's only losing money fast, and that's just part of the game. This is a way to actively invest. This is a way to manage your positions. It is a long-term game, and it's not something that, don't rush it. It's just not worth it. How do I change this back to... And they thought I didn't know how to use technology. I really don't. Okay, so what else do we have? Let me show you some other examples. Let's go to DXYZ. DXYZ was an amazing example back here. I think this is around the ChatGPT craze. They have a very small portion. This is an ETF. They have a very small portion of ChatGPT under ownership. But basically, they're invested in ChatGPT. I don't know. They're very invested into SpaceX. So I'm assuming it was probably some sort of SpaceX-driven move. But they also have OpenAI, which is pretty interesting because OpenAI is not a publicly traded stock. Okay, right here, let me show you something really quick. This is a thin stock now. It wasn't this thin before. Hello? Does this program respond? Dude. Like, are we serious? Okay. This is a thin stock, so you don't want to see a 1 minute chart that looks like this, where there's like basically no volume down here, and you can see these candles are flat. This is what's called a thin stock. You do not want a stock that looks like that. If you want a liquid stock, you want something like Microsoft. See, these candles are very full. There's volume all over the place. Very liquid stock, right? Let's go back to DXYZ. That's just a mental note really quick. Yeah, so, oh my God, I never even told you guys how to sell the position, so I'll tell you that right now. Basically, same criteria, right? A big move up of 30% or more. We can see the stock pulls back to the moving average here, pulls back to the 10. We have the 10, 20, and 50. The 200 was actually non-existent yet because This was a recent IPO back here, has not been 200 days yet, so there can't be a 200-day simple moving average. It hasn't been 200 days. Anyways, big move up, 350%, pulls back here to the 10, does not build an orderly range. There's not a setup here. It does look like it's kind of breaking out here. The volume kind of died out. This is not where you want to buy it. This is not an orderly pullback, not a good-looking range. Pops back up and still puts in a lower high. What does it do again? Drops down to the 10, holds the 10 very well. If I were to remove these trend lines, you guys can see, it holds the 10 simple moving average very well and tightens up along this entire thing. So it just keeps getting tighter and tighter and tighter, putting in higher lows and lower highs. At some point, this thing is going to pop right through that range, which was this day right there. So in this case, it was not opening up above previous day. Well, no, it was not opening up above previous day high. It was a little bit away. So we want to make sure that this is not only breaking out of the range, but it's also breaking previous day high. One thing to note, again, is thin candles are a very good indication that the next day might be a breakout. I did attempt to buy it on this day because it opened here and started to go higher. Opening range looked good. I bought it off 1-minute highs. It turned around and stopped me out very quick, hit the low of the day very, very quick, and ended up putting another thin day in the next day. I still would have bought this, like let's say if this was it and I attempted the breakout here, I thought, because there's a thin day, it might give me a breakout here. And if the next day this broke previous day high, I would have bought it right away. So if this opened even down here and then it comes up and it takes out previous day high, I would have considered that a breakout because I would say that is breaking out of the range at this area. But it would have to break the previous day high. So let's say the stock opens here and you have, the first 1-minute highs or whatever is, already broken. It's not breaking out of the range yet, so you can't buy it. You have to wait for it to not only break out of the range, but for it to break the previous day high as well. And in this case, it didn't do that. It just ended up putting in a thin day. So I'm sure the 1-minute highs were taken out, but it was not breaking out of the range, and it was not breaking previous day high. Now here we have it totally breaking out of the range, totally breaking previous day high. I did not have to wait for previous day high. Here, I only had to wait for this previous day high because it was another thin candle. Volume was totally dying out once again. If I look at that even bigger, you can see totally dying out. And that is the day that I bought it. So as soon as it breaks previous day high and it's breaking out of the range, I make sure that the 1-minute high has already been broken. If the 1-minute high has not been broken, then I wait for it to break that 1-minute high. I buy it as soon as it breaks that 1-minute high, put my stop loss at low a day. I use the risk calculator down here to figure out how many shares or a rough estimate. And then I go to Weeble and I do exactly what I showed you guys on Weeble. That's how I buy it. So I buy it at a market order. I don't have to check the stop loss box, but you can. The second you click to type in a stop loss, it'll check that box for you. That's on the classic trade tab. You can also do this on mobile. It's an advanced order. So you do a market plus take profit / stop loss, and it's the exact same process as the one I just showed you. So go in your phone and kind of mess with that a little bit if you want to figure that out. And then my stop loss goes at the low of the day. I double check on Weeble to see how much I would lose. So sometimes, this might not update in fucking light speed. So give it a second and double check on your broker. If your broker doesn't do that, then double check. Is this, does that make sense? Maybe go a little bit less than what this is. Because these things can move very, very quick off open because we're buying these things around open. But basically that's what I'm doing. And yeah, stop loss goes at the low of the day. Now, taking profits, I'm going to show you guys. As far as taking profits goes, I wait until I'm up 5 times my risk. So let's say I bought this as soon as that previous day high was taken out, assuming 1-minute highs were already taken out, which probably not in this case. I don't actually remember. But our stop loss is very tight. So it's a 2% stop, meaning I can put around 50% of my account into this position, only risking 1% of my account. That is very important. Most of the times I do anywhere from 1/4 to 1% of my account as far as risk goes. It depends on how much I like the setup. The stronger the stock is, the better it's holding up, the better the setup, the better the theme, the better the market conditions, the more I risk. So 0.25 on a pretty mediocre stock, 0.5 on something average, and then 1% when all variables align. Trading is not about pattern recognition. It is about aligning multiple variables. And not only are you aligning multiple variables, but getting a chart pattern is just an entry tactic on a stock. The whole thing is to look for a strong stock and look for a good stock first. Make sure that you're looking at the right stocks and then use the chart pattern for an entry. That is all an entry tactic is, and that's all a chart pattern is. You have to know how to identify those good stocks. Boom, I'm going to teach you guys. How long has this video been? I don't even know where to see that. Fuck it. It's been a while, that's for sure. But anyways, So when I'm up 5 times my risk, this is usually a couple days into the position. Sometimes it can be on day one. You might have a really strong breakout. This thing's up 50% in a day, whatever. But as soon as I'm up 5 times my risk, which is likely on day 2 because of how tight this stop loss was. But basically, let's just consider it day 3 because I do believe I trimmed on day 3, not day 2, for whatever reason. But if I'm up 5 times my risk at any point in this day, I'm going to wait until the end of the day. So my buys are always within the first 30 to 90 minutes of market open. 90 minutes even is pushing it. Usually it's within the first couple of minutes. You guys can obviously tell by that 1 minute opening range high. But I trade in the morning for that first hour. I also live stream on my Discord, so I show you guys what I'm buying, what I'm selling. You guys ask questions all day. I'll have that linked in the description of this as well as my TC2000 layout with the whole document, how to get it set up and things like that. But yeah, so basically what I'm doing is I'm on for the first hour. I mean, I just do it to stream. Most of our buys and stuff are kind of done after the first 15 to 30 minutes. But I'll just sit there and answer questions and chat with you guys for an hour and a half sometimes even 2 hours. But yeah, I'm buying these things very early on. Now, all of my sells are done at the end of the day. So if something stops me out, it stops me out, right? I have a hard stop. I don't need to stare at the chart. It's not going to fucking tell me anything by staring at the chart. It's just going to make my emotions go crazy, and I'm going to make irrational decisions. I'm not making decisions based on a strategy. I'm making decisions based on emotion because I think I know better than the strategy because I don't know why. That's just how the human brain works. I really don't understand, but every single person I've ever talked to and every person I've seen trade, for some reason, they get a strategy and well, shouldn't we sell it here? And it's oh, where the fuck did you get that? You just made it up in your own mind because looking at the chart, your brain for some reason thinks, oh, it's up so much, we need to sell it. But nope, stocks can always go higher. That's a lesson you need to know. Anyways, when I'm up 5 times my risk, so let's say this day it opens up, I'm up 4 times my risk. Maybe up here, I'm up 5 times my risk. I don't sell my position the second I hit 5 times my risk. I wait until the end of the day because the end of the day has the highest chance of closing near the high of the day. Now, it's not perfect, but it gives you a better sense of direction. If you do it at open, it's never good. Trimming at open is never a good thing unless you get really lucky and for some reason it's a red day, but it's just not ideal. We're not playing on hopes and dreams here. We're playing on a strategy. So wait until the end of the day, and if that day you're up 5 times your risk or more, you're going to trim anywhere from 10 to 30% of your position, depending on how much you're up. Let's say you're up 10 times your risk. So we're risking $1,000, right? We bought it back here. Our stop loss, this difference is about $1,000. It's a 2% difference. You have a $100,000 account. Let's say you put $50,000 in this position. At the end of this day, you're up so much more than that. You're up 25% of your account in 3 days because, it made a 56% move. You're actually up 29% in this case. No. I really don't know basic math. You're up some fucking percents. I couldn't tell you, dude. I really couldn't. You're up 28%. I think that's what it is. Whatever. Half of your account's in this thing. The stock's up 56%, basically, is what I'm trying to tell you. You're going to be up a lot more than 5 times your risk, but you wait until the end of your day, or you wait until the end of this day, and then you trim anywhere from 10 to 30% of the position. If it's up this much like this, where you're up 10 to 20 times your risk, trim 30%. If you want to keep it constant and you don't want to play a guessing game because it adds in too many variables, then just trim 20% and keep it stagnant. If you're up 5 times your risk or more at the end of that day, wait and then trim 20%. Just keep it completely constant. Makes it a lot easier at first. You don't have to play a guessing game. And the better you get, you can start to variate it because that's something that I've been doing for a while. I used to just do around 30% every single time. I think 20% is kind of a better mark. And then you can do 30% if you want to. You can do 20%. But guys, one thing I can't stress enough, let me tell you that in a second because I'm going so off topic. Anyways, so when you're up 5 times your risk at the end of that day, trim however much you want. I say it's a good idea to keep it at 20%. And then you move your stop loss from the low of the day to break even because now your stop loss is at break even, meaning you've already sold a portion of the position for a profit, a 56% profit to be exact in this case. And your stop loss is no longer for a loss. Your stop loss is now at break even. So that's exactly where you bought the position. And to sell the entire thing, you wait until it closes under the 10-day simple moving average. So you have that initial trim at 5 times your risk. And then at the end of the day, again, if this stock is about to close below the 10-day simple moving average right here, that is when you sell the entire position. So in this case, I have an alarm set for 3:55 p.m. So basically what this looks like right here is I'll have my alarm and it'll say, I'll label it whatever stocks that I'm looking at. So I'll look at my watch list and I'll be like, okay, is there anything in this watch list that I need to trim at the end of the day? Is anything up 5 times my risk? Is anything about to close below the 10? What's going on here, right? And I would look at this. So we can see Newegg is a position I've been in for quite some time. This is one that could potentially close below the 10 in a couple days, but it's still way above it, so I don't even need to do anything. But when I was, looking at it this day, I'm like, okay, I need to fucking trim some because I bought it back here. Definitely up 5 times my risk. Well, actually, this day is when we took our first trim. Basically, it would look like that. And then I can see this day is strong. I'm already up 5 times my risk, around open. So I just literally clicked that, flagged it, went to my alarm, put Newegg, N-E-G-G, and said trim. And then I just come back at the end of the day. Look at this thing. It's at the peak almost at the end of the day. If we look at every green day, every successful green day on this thing has been very, very close to the high of the day, right? So that's why I do it at the high of the day. And so far, now I'm just waiting to sell the entire thing. I'm waiting for this to close under the 10. Let's go back to DXYZ. Let's go back to the setup. If this thing freezes one more time, bro. Also, a lot of you guys don't know, down here there's a little scroll bar. I don't know if you can see that, but that's how I go left and right. It does freeze a lot, and you can use the arrow key, or you can use these brackets, these things right here, the little brackets. Boop, 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 boop. That's how I go bar by bar or candle by candle. But yeah, at the end of the day, this is when you would sell the entire thing. So let's go back over it. Big move up of 30% plus or more. An orderly pullback to the 10 and or 20 simple moving averages. Moving averages should be in order. You have the 10, 20, 50, and 200. Ideally, they should be inclining at around a 30 to 45 degree angle. We can see this is almost a perfect 45 here on the 20, and then the 10 is kind of more like a 30. The range should be tightening where we get higher lows and lower highs. A thin day is usually an indication that the breakout is about to happen, that the next day could be a breakout day. It's not always the case, but it is, a lot of the times. As this stock is building the range and going sideways, the volume should be dying out, and then breakout day should be on high volume. Checklist for the breakout is you want to see that's breaking the range, breaking previous day high, and then you wait for the 1 minute opening range candles. If it is already breaking previous day high and already breaking out of the range, a stock like Jobby where it was gapping up out of the range, then all you have to do is wait for the 1 minute opening range high candle. If it's already broken 1 minute highs and it has not broken out of the range, or maybe it's breaking out of the range, but it has not taken out previous day high, wait for it to take out previous day high. I usually have price alerts set. So in this case, what I would do is I would, look at that right there around like 43.21, right click, create price alert. Boom. It'll notify me as soon as this thing is breaking out. So I go through my watch list at night and I check and I'm like, all right, is there anything I need to set a price alert on? So that way I get notified if these things start breaking out, and then I can look at it, make sure it meets all criteria, blah, blah, blah. You buy it, you calculate your risk. If you want to know how to calculate your position size, the formula for that, which isn't simple, risk divided by entry minus stop. So your stop loss is always low of day. Your risk is always no more than 1% of your account. If you have $10,000, you would put 100 divided by, let's say your entry here is 43.35. You put 43.35 here. Your stop loss is low of day, which would be 42.26. You would put 42.26 here. You would obviously do parentheses first because of PEMDAS or whatever. I know you guys remember that. And then risk divided by that. That'll tell you how many shares to buy, so you would buy that many shares. There's tons of other ways you can do that. I think using TC2000 is the easiest. By the way, guys, this program is I think it's like $50 a month now for like the premium or whatever. It's the middle tier package is the one that you want to get, and it's like so fucking worth it. Every single person I've ever had use this program, they're like, dude, my life has changed. And I wish I was being dramatic. I really wish I was. Anyway, so you do that, you figure out how much to buy, whatever. When you're up 5 times your risk or more, at the end of that day, you trim a portion of your position. Like I said, you should probably just keep it to 20%. Keep it stagnant while you're learning, because more variables equals more error. Super easy. Wait until the end of the day. You can see perfect strong close here. Sell 20% of your position. To do that, by the way, when you do an advanced order on Weeble, it's not going to let you sell a portion of your position. You're going to have to go to Weeble, and then you go over to that positions tab. So like I was showing you guys earlier, you go over to the positions tab. or no, sorry, you go over to the orders tab and you'll see your pending orders of the buy and the sell because you did an advance order. So the buy and sell are grouped together. The buy at market and then the stop loss at market will be grouped together. Always use market orders, never use limit orders. Always set your order types to good till canceled and market. That's very important. But then you would go over to your orders, which you would see your pending orders, your stop loss, all that stuff. You'd click cancel, and then you'd go over to your positions. You'd click close, and then you click sell to close, and you would do it at a market order. You would sell 30% or whatever it is, 20% of your position. So if you have 100 shares, sell 20 shares. And then you would move your stop loss. So then you would click close. Then you would go to the sell type would be not market anymore. It would be stop, which would be stop market if it says that, if you're on a different broker. On Weeble, I believe it just says stop, if I remember correctly. And then you would now move your stop loss. Instead of it being at that low of the day, it would be whatever you bought it at, break even. So your break even is going to be different than my break even and Tommy's break even and Johnny's break even. It's not a simple thing. Well, it's fucking simple because you just go look at your position and see, where did I buy this at? What is the average cost of the share price that I purchased this position? Do you guys think I'm smart or dumb? Anyways, and then you sell the entire thing when it closes under the 10-day simple moving average here. You wait 5 minutes before close. I have an alarm set 5 minutes before close. I go and I check on my positions, and if it's closing below the 10, 5 minutes before close, I'll just fucking sell the thing at market order. Cancel my stop loss, and boom, offload every single share that I have. And yeah, that's about it. The other thing I was going to tell you guys earlier, I want you guys to know that with this strategy, you're not going to have a very high win rate, and it's going to be a pain in the ass sometimes because what's going to happen is sometimes you'll see stocks like this breaking out, and they'll turn around. You might be in a profit, but maybe you haven't hit 5 times your risk yet, and they turn around and they hit your stop loss, and it's very frustrating, and it's very annoying, but you have to execute like you're a robot. An algorithm wouldn't be annoyed. An algorithm wouldn't be upset, and the stock doesn't know that you're upset. The stock doesn't care. It doesn't even fucking know you exist. It doesn't know it exists. Like, you can't have your emotions into this. You're executing based on a system. This is a very, very systematic process. So don't try to get in your head and don't try to like override the system. Don't try to be smarter than the stock. You are not smarter than the stock. Just follow the rules. That's the biggest thing. I don't understand how people struggle with that. If you have a set of rules, you guys can go through this video and write down all these points. I've given you every single rule. I've given you setup criteria. I've given you moving averages. I've given you entries. I've given you how to trim. I've given you, pretty much everything you could fucking ask for. Have that checklist, have those rules, and just follow that. Like, if it turns around and hits your stop, it doesn't matter. As long as you didn't sell this thing early, it really doesn't matter, because the worst thing is you'll get in a habit. Like, let's say you go on a losing streak. You lose 5, 10 trades in a row, whatever it is, because that is 100% possible. It's fucking annoying, but it's usually like around that is like probably like the maximum. But let's say you get in the habit of trimming these positions early because you're like, oh my God, the stocks are tending to fail on me. When the market gets good and things turn around and momentum stocks start working, and these types of setups work extremely well in momentum market conditions, let's say everything lines up, the market starts doing good, and your dumbass is trimming 50% of it when it's up a tiny bit or on day one or within a couple minutes of you buying the thing, because you want to lock in those profits, right? You're never going to find those big winners. You're never going to hit those home run trades, and you're never going to be in the position that I am or any of these other successful traders, because the reason people get successful is they hold these positions out. And the reason people make a shit ton of money swing trading is because big moves take time to develop, and stocks will always go higher. You know how many people told me that GameStop was not going to go higher? You know how many people told me that it was going to go higher over here, and I shorted it all the way down to here? Do you know how many people have told me so many fucking things, and all I've done is sat here and stuck to a system? Look what happened to GameStop before this thing broke out, or before this thing made a huge move. Guess what happened? A breakout setup, 2 of them, to be honest. Things start pulling up, very strong stock, moving averages in order, 10, 20, 50, 200, sets up right here, breaks out here, high volume, right? Pulls back here, puts in higher lows, holds the 20 right here, volume was dying out. We have a thin candle right before breakout day. This is a little bit harder of a setup to spot, but it was definitely a setup. Breaks out here on extremely high volume. As soon as it takes that previous day high, that is when you buy it. Stop loss at the low of the day, a 2.26% stop loss. You have half of your account. I don't know why I can't speak. Half your account in this position. GameStop from your entry is now up 2,063%. Now, of course, when it closed under the 10, it did not be 2,000. It was 348%, but still fucking amazing. there is a way to get out of this, and I will teach you guys that in a different video. If you guys want to learn about that, let me know in the comments, because there are ways to exit stocks when they make dramatic ass moves like this, and when there's tons of hype around them. I know how to trade these things in pretty much any market condition. I've seen so many different types of setups. There's another setup right here. Great indication, right? Higher lows, not really lower highs, but it is building a range. Breaks out again here. You can add to the position. What's happening as the stock is going sideways? The volume is dying out, and it is definitely above these moving averages, so it's not favorable to buy it here. But yeah, super easy, right? So you're buying it back here on breakout. If you didn't get in the breakout, then you're getting in it here. Makes a giant move still, even from here to here. But either way, it had tons of different setups. So many people were telling me this is too high. I'm an idiot. I'm going to lose my ass on this. They're sitting there on the sidelines, and I'm making a bunch of fucking money. A bunch of retards is what it is. People that think they know better than me when I've been trading for 6 years. Of course, back then I wasn't 6 years into this, but I had a pretty good idea of what I was doing. Anyways, don't listen to people. Don't listen to your emotions. Listen to the rules. Build a set of rules, and you'll be a very, very good trader. Now, let's go into how to actually find these stocks. So up here in the top left, I have the 6-month, 3-month, and 1-month gainer scans. I also have the 1 week and the large cap, gap scan, and volume scan. I will tell you guys about volume scan, gap scan, and large cap in a different video. For now, we're going to focus on the 1 week, 1 month, 3-month, and 6-month gainers. Most importantly, the 1 month, 3-month, and 6-month. Basically, what these are doing is they're going through and filtering these stocks for you. So the filters that I have set up is the top 2% strongest stocks over those 3 time periods. 20 bars is this one, which is, about a month. So this is the 1 month gainer scan. I'm looking for the top 2% of strongest stocks over that time period. And then, same criteria. All these are same criteria, just different time periods. So it's 20, 60, and then 120 as far as bars. ADR is 5. I have in the document how to add this formula, because you're also going to want to add it up here on your toolbar. But basically what this is a stock that's moving faster than 5% per day. When you have a stock that's slower than that, you're going to end up with really tight stop losses of maybe 1% or less. And what that's going to force you to do is put your entire account into one position. You don't want to do that, and those stocks are very slow. They're not going to make crazy moves. They're usually higher market caps or just slower movers in general. They're not going to be the momentum stocks that do things like GameStop does. GameStop actually initially had a 12 ADR, I believe, before taking off. So it was a higher ADR stock, and that's what you want. Price history of above $1. The reason we want that is because funds and institutions are not really interested in stocks that are priced below $1. Some can argue that could be $5 or maybe even $10. I do have another scan for that, but for now, this is basically all you need as far as momentum stocks. And then dollar volume is 30 million. So that's about it. And basically what this is going to do is you're going to go through here. I sort by dollar volume. So I go through these 3 scans. You can do it every single night. You can do it once a week if you want to. But basically, this is showing us the strongest stocks over those 3 time periods. We go and we look for setups. Right away, we can see Jobby on that list. I'm also going to show you another setup on Jobby. This is one that we traded. I had initially noticed that this stock was gaining tons of momentum back here. Very strong stock. It came up on my 1 month, I believe, the 1 month gainer scan back here. This thing was up off the lows 83%, pulled back, built a range right here. What do we notice? Higher lows, lower highs, breaks out here. In this case, it opened up down here. It took out 1 minute highs really early on, but again, it was not breaking out of that range. Once it started breaking out of this range, I still didn't buy it. I waited for it, guys, and as soon as it took out the previous day high, that's when I bought it. So I was left with a very wide stop of about 5.64%. But if we look at this thing, a couple days in, on this day is when I was up 5 times my risk, because you can see, I wish I could show you. I'm pinching the chart to show you. But this was, the stop loss. So when it was up here, that was about 5 times my risk. At the end of this day, I trimmed a portion of my position, moved my stop loss from the low of the day to break even, and I continued to hold this position all the way up until this point. This day, it closed under the 10. That was when I sold the entire position. So total gain from here to here is 86% in 1.1 months. What happens? The stock set up again, continued to put in higher lows, lower highs, built a range, broke out this day. I bought it again. You can keep buying these things. You know what I'm saying? It's so fucking easy. OKLO, very, very strong stock. Giant move off these lows. It pulled back, built a range here, initially broke out here. I bought it this day. It quickly pulled back to the 10. I sold it when it closed under here. I did not really have a chance to sell this at 5 times my risk, but I did sell it for a very, 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 very small profit. Then it came back. It broke out of this range. I don't like this range that much because it was channeling down. It was building a pretty ugly setup here. It did break out here on decent volume, and it has been going ever since. It's up about 37%, but I don't really care. It's starting to build a range here. If we look at this compared to SMR and OKLO, we can see, or OKLO versus SMR and NNE, we can see that OKLO is the strongest stock in this group. I'm sure there's other stocks in this group where you have to do your research. Those are nuclear stocks. We're looking for themes here. The most important thing when it comes to trading stocks is being at the right stock, being in the right stock at the right time. It's all about timing. The cherry on the top is the setup. That's how you get the entry. But if you just look for strong stocks with those inclining moving averages, everything looks good. They're pulling back, building those ranges, and you purely trade those, you can still make a shit ton of money. To get better at it, that's how you implement all these themes and all these other things, which is like what I teach you guys in my Discord. So obviously in the YouTube videos, I can give you the general concept. In the Discord, when you guys trade with me live every single day, I tell you what to buy. I tell you when I'm selling it. I tell you, what to look for. I send you my watch list, things like that. And we have the meetings and all that stuff. So it's easy to go over all those questions, answer everything that you guys have. For those of you who are in it, which is probably going to be most of you guys watching this video, you guys know it's fucking awesome. And it really is. Because you guys have been killing it. You guys have been, I'm not even kidding. You guys have actually been doing really, really good. And I'm pretty happy about that. But it's harder for me to teach that on a YouTube video. So that's stuff. I know you guys are going to ask questions about that. My Discord is only $500 right now. So if you want to get in it, I'll tell you, it is well fucking worth it. And that price is not going to be at that for definitely not forever because, I just don't think it's fair to me or anyone really. It's like, Jesus, are you going to steal from me at this point? But anyways, back to this. So enough talking about my Discord because I know a lot of you guys just want to watch my free YouTube videos, which is great. You don't need to join that if you don't want to. But anyways, I don't know. I keep going. I don't know, what's wrong with me. My brain will process 50,000 thoughts at a second. I can't talk as fast as I can think, and it's just all over the place. I was thinking about the Discord. I'm thinking about the chart. I'm thinking about the setup. Thinking about the entry tactic. Thinking about the exit. Thinking about the themes. Thinking about oh my god, it just doesn't stop. And no, I don't take any drugs. Someone asked me before if I took Adderall. I was like, dude, if I took Adderall, I'd probably explode. But yeah, anyways, you're going through these lists and you're looking for these stocks. This is a very strong stock making a big move up. So I put it on my flagged list. This right here, to make this a flagged list, you click on where it says flagged right here. It might say U.S. common stocks or it might say my name depending on how it is when you open this. And you click on flagged items. That way you can just click the flag here or shift F and it'll pop up. And if you want to remove an item from this list, you click the flag here and it'll go away. On the focus list here, this is the stocks that I want to pay more attention to, stocks that are already setting up or in very strong themes, very strong groups of stocks, or just good setups in general. This is where I put, all the good stuff. I'm like, damn, I really like these. We can see a lot of breakouts happening recently, but a lot of stocks are running into earnings. This is a great one. I want to buy this one so bad. I'm just waiting for earnings, which is tomorrow. I don't know if it's pre-market or after hours. I have not checked on that. But yeah, basically look for the good stocks. Look for things that are gaining momentum. Very strong stocks on this list. Something like SIM, for example. If you see this back here, like this, it's maybe not building a range. Well, it was building a range right here. Okay, let's say you see it here. It's not building a range. It hasn't pulled back and set up or anything. But you would put this on your flagged list, and then you'd wait. You'd stalk the stock, right? You're a sniper. You're a lion in the jungle, whatever. You're waiting for it. This is your prey, right? You're waiting for it. You're just waiting for the perfect opportunity. You wait for that pullback, that setup. Boom, check this out. It pulls back, it sets up. Oh my goodness. I buy it here and nothing fucking happens. It just pisses me off. I don't know why this thing did that. And then it just comes back, sets up again, and starts to break out today. But we have earnings in 2 days. I'm like, geez, dude, how many of these things I'm going to buy coming into earnings? I don't want to buy them all. But Jobby was the best, so I ended up buying Jobby, and it's actually performing really well, doing really good. Picking the right stocks is the most important, and it's the hardest thing to do. I was about to tell you guys again in my Discord, it's so much easier, but whatever. I don't know, just check up on all the stuff. Practice this, because it is a hard thing to do, to pick the right stocks every time. Initially, you're going to suck at it, but you'll start to get the hang of it, and it's not that hard. I mean, I guess I can't really say that because I've been doing it for 6 years because it was hard at first. I didn't really get it. But I just kept doing it over and over. The more I saw market cycles, the more I saw how these things acted, the better I got, and that's about it. But yeah, just go through, build yourself a watch list. These are the scans. This is going to tell you how to find those stocks. You don't really have to do much. Just look for the strongest stocks. Look for the ones that are very clean. They're going up the best, and then just wait for those ranges. Stock the stock. Build a list of stocks that are very, very strong. Something like this, prior to this day, this is not something I'm interested in. It's not very strong. I've also posted a YouTube video on this channel called Reviewing Breakout Setups for 46 Minutes, I believe is the title. I can verify that really quick. But that's a really good video. And if you guys want me to just kind of review a bunch of breakout setups, or maybe I can post a large database. I do have a lot of screenshots. I know tons of people in the Discord have a lot of screenshots. I believe there's some people with some pretty decent databases in there that I'm sure they would not have an issue sharing. Let me know about that. But let me see. It was, reviewing breakout setups for 46 minutes. The video is 3.7 thousand views, and it's 46 minutes long. 3.7 thousand views isn't really bad, but I mean, shit, I think it's a hidden gem. That shit should have like 1 billion views, because that is really important to know what stocks look good and what stocks don't. Because a lot of people look at breakout setups, and I'm like, are you blind? Like, come on. Did you even follow any of the checklists? I really don't get it. I always joke with you guys. I'm like, are you guys trading with your eyes closed and your headphones off? Like, what is going on? I don't understand. Something like this, now it made a big move up. It's pulling back, but I'm like, I don't know. It's kind of cutting through the 10 here. It's making lower lows. I don't really like it as much. If we go back and look at this, when this thing gapped up, this looked great, right? It gapped up and it built this range, putting in higher lows, lower highs. Not really lower highs so much, but higher lows. Totally looked like GameStop back in that area. And then broke out right here. Very tight stop loss. Made a giant move. You could trim on day one in this case because your stop was so tight. You're up 5 times your risk on day one, and then you sell the entire thing when it closes here. So you end up making 5 times your risk plus a little bit more because the initial or the total exit is over here. But yeah, there's setups fucking everywhere. And look at this thing. The real good move on this was when it started picking up back here. So we can see. I'm also going to show you another thing really quick before I go. That'll be the end after I do this. But this first breakout here is very, very hard to identify. This isn't ideal, but the stock was picking up. One thing here, oh my God, there's fucking breakouts everywhere, dude. Look at this. Giant breakout setup here. I saw this. I was posting about this on Twitter, TikTok, fucking YouTube. I'm like, what is going on here? Giant range here. Breaks out initially, and then, quickly sets up, goes higher, sets up again, builds this range, right? Volume's dying out. It's kind of an ugly range, but then it breaks out here. When it breaks that previous day high, I buy it, stop at low of day, and this thing just fucking soars through the roof. Just keeps going, right? Doesn't want to stop. There's another breakout right here. There's technically another breakout here, but that's another really hard one to spot. And then it fully closes under the 10. Another breakout right here. Like, oh my God, these things don't want to stop. And it fully closes under the 10 here at 187%. And then not long after that, we get BBAI. I like these stocks that build these ranges for long periods of time. The longer the range, the more interested I am, to be honest. As long as it's not like years, or like lots of months. Like around this area is really good, like around a month. I think those are when some of the most explosive stocks happen, but it can be anywhere from 3 days to a couple months, maybe 3 months. But I would say definitely the best ones are like around this sweet spot of like about a month. We can see this thing pulls up, it's gone its way up, pulls back here, builds this range, breaks out here, quickly pulls back, but the whole time it's just putting higher lows. Kind of built a range here in a sense. It didn't really tighten up all that much, and then it broke out here, quickly pulled back, built this great range, lower highs, higher lows. I mean, I could even draw this all the way back there, right? Like this is a huge range. I love this example. Volume was dying out and breaks out this day on very high volume. So this day, you just wait for those 1 minute opening range highs. It's already breaking out of the range. It's already breaking previous day high. And then 5 times your risk at the end of the day. Sell a portion of your position, move your stop loss from low of the day to break even, and you keep holding until it closes under the 10. And that's this day right there. Let's take a look at what happened. Not much. But look at this stock again. What's it doing now? It recently made a big move up. It started pulling back, building a range. I loved this stock right here. I think this looked really good. Another very good length of consolidation, putting in higher lows the entire time, right? Like here, moving averages look great, 10, 20, 50, 200, all inclining at a very good angle, volume dying out perfectly, and it just didn't break out. So, oh shit. I was upset. I'm really upset. But earnings is coming up. I have an earnings strategy. Maybe I'll release that tomorrow. If this video does good, I will give you guys the earnings strategy very, very quick. Make sure you share this to all your fucking friends. Share it to your mom, your grandma. Share it to whoever you can. But I want you guys to help me grow my YouTube because I do put a lot of work into this stuff and I do give out a lot of good info. I'm sure it'll grow just because of that. I mean, this stuff's totally free and it's great info. Last thing I'm going to show you Two things really quick. Market conditions. A great way to gauge market conditions is looking at CompQX, which is the NASDAQ. You can type in IXIC or you can type in CompQX if you're on TC. If you're on anything else, I believe it comes up as IXIC. One thing to note, if you want to be very black and white with this, when the 10 is below the 20, don't trade. When the 10 is above the 20, you can trade. Now, of course, you can trade during these periods. Of course, you can trade when the 10 is below the 20, but you have to be a little bit more advanced. Basic rule of thumb, if the 10 is below the 20, the 10 crosses below 20 on the CompQX, NASDAQ, IXIC, SPY, QQQ. Usually this is the better one to look at is CompQX. Most of the stocks that we're trading are in the NASDAQ. When it crosses below the 20, just don't fucking trade, okay, please. And then when it crosses above the 20, the 10 crosses above the 20, and both moving averages are inclining, you can start to trade again. Keep it very simple. Now, as far as leading stocks and leading groups, I'm going to show you something really quick. QBT was a leading stock in a leading group back when Quantum was having its run. So Quantum, these stocks picked up really well. The only real good setup was back here when it pulled back and built this beautiful range right there that we can see. Volume was dying out, and then it breaks out here on very high volume. Same exact setup. As soon as it's breaking that previous day high, that's when you buy it. It's breaking out of the range. 1 minute high is got to be taken out, and then stop loss at lower day, blah, blah, blah. 5 times your risk, which would have been the first day, and then you sell the entire thing when it closes under the 10. The setup just keeps, it's so perfect. But if we look at IONQ, it was actually initially starting back here, and then it really picked up, but it never gave a setup. We look at RGTI. These are all quantum computing stocks, right? They're in a group. It never really gave a setup here. It kind of gave a setup here where it went sideways. It was putting in higher lows, but the type of ugly-ass setup is that? It's trash, right? And then we look at QBTS. QBTS gave a couple setups. Here, maybe. Here, yeah, that was totally a setup right there. And then here, debatable, probably not. This one, yeah, that was a setup. It made a 200% move. But look at how good QBT set up during this time, right? QBT had the best setup of them all. And it wasn't, I don't know if this was the first, no, 1216 QBTS was on 12.5. So this one initially broke out first. This gave you the first setup, so you would be in this one. But then you see QBT setting up so perfectly. Look at the length of this consolidation around that month point. Same thing, right? And it's a very strong stock. It had made around 1,000% move before setting up. QBTS, because QBTS was the only one that actually set up, had only made a 200% move. The ADR on QBT was much higher. I don't remember the market cap on either of these, but the ADR on QBT was much higher. It was a much faster stock. It made the biggest move in the group, and it had the best setup. So right here, you would be risking 1%, and that's about it. But yeah, you want to look for the leaders in those groups. So you find the good stocks. You see if they're all in a group. Right now, industrials are doing really, really good. Most notably, we have these drone stocks. So we have ONDS, which is a competitor to Joby in terms of not business, really. I don't know. But in terms of setup, right, there wasn't much of a setup here, right? But this is a very strong stock, and it's in a really good group, so it's strong. But, look at the price history of this. It bottomed out over here. It's been putting in higher lows since then. It made a big move off these lows. It pulled back, built a range. It didn't really do much. It broke out here, pulled back real quick, built a range. Kind of, not really. Broke out today. It was a great day. But Joby had a great setup, and it's the leader. We also have AVAV, which is another drone company, not breaking out yet. It is building a great range, very, very long consolidation, higher lows, lower highs. It's tightening up totally. We can see this on the hourly. It's debatable if I would want to take this because Joby is already breaking out. Usually the one that's breaking out first is your best bet. So you want to see the strongest stock in that group, which if we look at AVAV, it's not bad, but if we look at Joby, right, so much cleaner. This looks so much better, and it sets up perfectly. Two great setups right there. This one set up first and broke out, so I was initially in Joby, while the rest of these stocks weren't giving me much. ONDS, AVAV, there's a bunch of other ones. I don't know if KTOS was a drone stock. I can't really remember, but it didn't really set up back there, and it's not as strong. Like if we look at this, it just doesn't look as strong as Joby. Long term, it looks strong as shit. Like, this thing has been going up for a long time. But, not bad. Like, this is a pretty good setup. But Joby was breaking out first. It opened up above the range. Like, within the first fucking minute, this thing was ready to go. This is the leader. So, identifying leaders is a very important thing. And, again, guys, this is not going to be an overnight process. This is going to take you some time. This video is pretty fucking long. But I hope you guys enjoy this. And if you want to see more from me, let me know in the comments. And if you like this type of stuff, subscribe, like the video, tell me in the comments, whatever it is. If you have any questions at all, let me know in the comments and I will reply, because these videos tend to not get too many views. But yeah, I mean, I guess that is pretty much my outro. I don't really have an outro. I'm not a YouTuber. I'm more of an educator. I put my button-up shirt on. I thought that was pretty sick. Hopefully you guys thought the same. And the new place looks beautiful. I love this on camera. I really, really do. I don't know if you guys can see, but there's Miami in the background right there. Looks fucking awesome. I'm loving this place. I'm loving the life. I've been having these like meal preps and stuff lately. A little bit. The gym schedule needs to get better, but the diet's been good. Everything's been good. Been super locked in. Great place in life. And you guys need to fucking get there, because I'm telling you, everyone is rich. I go outside and every single person's rich. I'm like, how does everyone have millions of dollars per month? Couldn't fucking tell you, but I'm not there yet. We'll get there. We'll get there eventually. But yeah, like I said, if you guys enjoy these types of videos, let me know in the comments. If you have any questions at all, let me know in the comments, and I will do my best to reply to them. I should be able to reply to every single one, because these videos don't get millions of views, even hundreds of thousands of views. You guys like my vlogs where I'm being an idiot more than you like when I'm teaching you how to make a bunch of money. Blows my mind. But anyways, that's about it. Peace out.